Hey, good morning and happy Wednesday, everybody. It is sunny and 77 degrees here in Wilmington, North Carolina, and this is your market update for February 22nd. So, yesterday, a horrible day in both the stock market and the bond market. In the stock market, the Dow closed down over 600 points, NASDAQ and S&P 500 both closing down on the day as well. Mortgage-backed securities closed down yesterday on the day 67 basis points. So, not a great day in either market. I'm happy to report that today we are slightly better, not significantly, but just slightly. Nonetheless, we are headed in the right direction. This morning, the markets opened up across the board. Dow just slightly up, 44 points on the day. As of a few moments ago, the Dow was up about 50 points. NASDAQ up about 17 points, and the S&P 500 up about 5 points. Mortgage-backed securities started off the day this morning up 6 basis points, and at one point in time, we're up, I think, 24 basis points. Last I looked a moment ago, we're up 20 basis points. So, again, headed in the right direction. Pretty much all eyes on the Fed minutes that are slated to come out this afternoon at 2 p.m. Of course, keeping in mind that that is the minutes from the last Fed meeting, which is taking into account employment numbers prior to the employment report that came out a couple weeks ago, which showed job creation significantly higher than what the market had anticipated. And also, the previous Fed minutes are not going to be taking into account the CPI and PPI inflation numbers that came out last week. So the minutes will be based upon slightly dated information. Although I do want to point out that the employment report that came out a couple of weeks ago was, if you look at it, dig deeper, as I mentioned this before, there's a lot of information and variables that are not taken into account in that job creation number that came out that should have been taken into account, such as seasonal adjustments and other variables as well. So the job creation numbers, they came out and were plastered all across the headlines. If you dig deeper, we're not near as strong as what that report and those figures would have indicated. Same thing with the inflation reports. If you're looking at the CPI numbers and the core inflation number, which is what the Fed focuses on strongly, 39% of that core inflation number is based upon shelter cost. Shelter costs are a lagging indicator. And so while they have been dropping, that's not been fully realized in the numbers that we've seen here as of late. So the inflation figures look like they're cooling less than what they likely are. And of course, the Fed's not super happy about that. So it'll be interesting to see moving forward what the inflation numbers look like in March when they come out for February, because the shelter costs won't be lagging as much. The drops will start to be realized in the inflation figures and should show and support that inflation is in fact cooling at a rate that's a little bit more aggressive than what the previous report would have reflected. Nonetheless, we will continue to keep you updated as we always do. Tomorrow we'll give you an update on what the Fed minutes consisted of, what they mentioned, comments made by Federal Reserve members and how that affected both the stock market and the bond market this afternoon. I hope that you have a great afternoon, and if it's sunny and 77 in your area, get outside and enjoy the weather.